All right, well, now we're going to move on to our panel on the emergence of the new economy. Over the last few years, there has been much discussion about the role of big tech in our country and whether these companies continue to serve their customers, be they individuals or businesses. This panel will explore these issues from the perspective of a venture investor, a founder, CEO, and a banker, SPAC sponsor, and the opportunities they see evolving in the new and fast-growing sector for investors. I'd like to introduce our moderator, Omeed Malik, the CEO of Farvahar Partners and Colombier Acquisition Corp., along with panelist Colin Greenspon, founder and managing partner of Narya, and Chris Pavlovski, CEO of Rumble. I'll let you all take it away from here.
Thank you. Thank everybody for joining us this late afternoon, and congratulations on a great conference that you're having here today. We're enjoying ourselves and meeting some really nice people. Thank you so much. So yeah, as mentioned in the brief introduction, I think this is a very compelling group, if I do say so myself, because every aspect of the private market is represented in some form or another here. As mentioned, my firm Farvahar Partners is an investment bank that exclusively focuses on helping high-growth venture-backed businesses raise capital all the way through IPO. In addition, we are a sponsor of SPACs as well to take those said companies public. So I look at the world from the perspective of a SPAC sponsor as well as an investment banker in the space. And then, of course, at Naria, Colin is focused on investing in those kinds of companies. And Chris at Rumble not only has started a very dynamic business that, if you haven't heard of, you will, is also gone through the SPAC process and is currently closing on their SPAC to go public. So entrepreneur, investor, banker, and SPAC sponsor. There's a lot to talk about, and we want to address a little bit about how I think the SPAC world and private investing is disrupting some of the incumbents, particularly in tech. But before we do that, I want to credentialize our panelists a little bit more to get into what they're focused on. So, Colin, let me just start with Naria. It's one thing to say, you invest in venture, and there's a lot of funds that do that. But if you could just briefly give us a minute or two on why your ethos is a little bit different than the conventional venture investor.
Sure, yeah. So we launched Narya the second half of 2019. I co-founded it with J.D. Vance and Peter Thiel. And always get asked the question, why start another venture fund? The asset class can seem pretty crowded. But we actually felt that we were a little frustrated with where investment dollars were flowing. We felt that GPs, to generalize, were really putting money in founders that were building companies that were really sitting upstream from M&A by the big tech companies, big enterprise software and internet companies. And we actually felt that there was a lot more innovation going on, especially in the heart of our country, across all these different industries, and no one was really serving the rest of the Fortune 1000. And so we launched the fund to go after that. And so we do things like invest in biotech, healthcare, agriculture, alternative energy, a lot of problems that need to be solved for the benefit of our country. But another area that we're pretty excited about is having some diversity around other alternatives to big tech. And we've been seeing this theme in both at the consumer level as well as the enterprise level, folks wanting choices away from Google and Facebook and Twitter and Amazon. And so a subset of what we do is focus on this market that we're calling the new economy.
Thanks. And for those that don't know Chris and Rumble, if you've been looking for content around COVID or the war in Ukraine or anything having to do with maybe President Trump, often that's deplatformed on YouTube. And so folks have been making their way and finding Rumble. You've been described in the press as maybe a right-wing alternative to YouTube. I think that's inaccurate. Can you kind of clarify exactly what the mission of Rumble is and what you're focused on?
Yeah, so I've been in this space for 20 years building video sites, and it was around 2010 that I started to see that there was some type of preferencing happening, some types of, you started to see YouTube kind of preference big corporations, big creators, brands, and multi-channel networks.
To clarify, YouTube is owned by Google.
Correct.
And when did Google buy YouTube?
About 2006, late 2006, I think November. And by 2010, we started seeing this preferencing happen. And in 2013, I decided that there was an opportunity to really kind of help the small creator get the distribution and monetization that they deserved and be able to, put their content up onto a platform and be able to find it. It wasn't until 2020 though that it was. I remember like late at night, 11 o'clock. We had a sign up from Congressman Devin Nunes onto Rumble, and I was like, shit, like, am I under investigation by the House Intelligence Committee? Like, what is he doing on Rumble? Like, a week later, I get on a call with Devin. He asked me a very simple question. He's like, if I put my podcast up there and I search my name, Devin Nunes, am I going to be able to find my podcast? I'm like, yeah, absolutely. So I'm Canadian, by the way, so this was a very, very interesting experience for me, being up in Toronto, having a U.S. congressman such as Devin contact us. So he brings his podcast to Rumble, and within 2 months, he accumulates over 300,000 subscribers on Rumble. And in 4 years on being on YouTube, he only had 10,000 subscribers. So once this happened, we saw this like enormous flow of creators, particularly on the right, join Rumble and create their channels on Rumble. And a lot of people think it's because we're a conservative platform. We're neutral. We don't, I'm Canadian. I don't really have a bone in the fight over here. So, but the reason why they're actually coming to Rumble is because they're getting more views, they're getting more subscribers, their return on investment as a creator was far exceeding the investment that was on any other platform. So once people saw that, we got to a state where we now reach roughly 30 million Americans per month, and Canadians and Americans per month, which is, when you compare that to YouTube at 190 million, that's a significant chunk of the US and Canadian market. And that's where we are right now.
Yeah, absolutely. And we did see, not to compare you necessarily, but there are some similar facts in the fact pattern of what happened with Parler. Parler was a competitor to Twitter, but was also trying to capture the same, I guess, zeitgeist, if you will, to get folks to subscribe to their platform. But what ultimately happened was what seemed to be very clear, concerted effort by some of Amazon, which was their web host at AWS, deplatforming them. So it's all well and good for folks and supporters of the free market like I am to say, well, if you don't like it, these are private corporations. They don't have any legal obligation per se to abide by the Bill of Rights. Go start your own. Well, Parler listened to that and did, and then what happened was their hosting platform kicked them off. So there was you start to see FANG effectively control our economic ecosystem probably the same way that the railroads did. And it is really the engine of commerce and communication. And so the question arises, at least from a legal perspective, does there need to be some changes here? We talk about Section 230, other private lawsuits, and whether these private corporations are really just tentacles of the state and acting on their behalf. But putting that aside for a moment, I think it begs a more interesting question about your business model, which is to say, how have you insulated yourself from a similar fate?
Yeah, so when we, like I said, I've been in this for 2 decades now, building websites and video sites. And when we started Rumble in 2013, we didn't use Amazon. We didn't use any of these incumbent cloud services. We kind of built everything through colo and servers and hosting companies, rather than what the traditional, I guess that would be traditional 20 years ago, but the traditional way these days is building off of someone else's backbone. So we built our own backbone. And in 2021, we were lucky to have Narya come in and invest in Rumble to really kind of further this and really invest on the infrastructure side, the rail side. After seeing what happened to other companies, it became more imperative for us to own even more part of our ecosystem and infrastructure. So we've put ourselves, we were kind of lucky in the sense that we built this the old-fashioned way when we started, and also lucky to have investors come in and help us really build out the entire infrastructure, and we'll be in the future launching our own cloud to compete against the incumbents as well. So not only just the video business, but the cloud business side by side. Having the vehicle like video, it really allows us to compete in a major way on that side.
Colin, I'd presume that B2B aspect of the business was extremely compelling to you.
Yeah, so we started looking into this theme, I'd say in early 2020, and we looked at a lot of different companies, and we felt like the tech was pretty basic at almost all of them. And so we then sort of decided, well, maybe the best way to do this is to incubate a company that can actually go serve both content creators and individuals as well as enterprise, and build this next generation of more independent cloud-based services. And through talking to a lot of folks in our network, we ended up getting connected to Chris, who had been quietly building a great business, and then had some really interesting tailwinds in 2020 to sort of really grow the metrics, and the user growth and hours of consumption, everything were outstanding. But it was really that tech stack that gave us comfort that they could truly be independent, as well as then continue to expand on the enterprise side of the business too.
Yeah, so let's pull on the string a little bit more about what you guys are focused on. Have you seen in your investing now more companies that are trying to take on these incumbents that we're talking about? I mean, if you look at the FANG economy, if you will, many of them obviously were extremely innovative at the early stages, but now they've become so big, they buy other companies, and in many cases they don't explicitly brand that they own these other companies. So if you think about Google and its controlling search, your email as well, and obviously we know that they kind of cross-pollinate there, as well as YouTube now, because they know what you watch, what you're saying. Apple, of course, has gone from being this innovative business to one that is effectively a rent seeker with the App Store. That's how they generate most of their income. And to the extent that they have upstarts that are competing against them, they can simply acquire them. Just the same way we saw Facebook now own Instagram, and of course, a method of encryption with WhatsApp as a form of communication, which clearly is going into one of these large companies as well. So you start seeing kind of smaller businesses try to compete, like Signal, on the encrypted side. And so this is, I think, Americans, I'll speak to that, want to have their constitutional protections respected, whether it's around the ability to have free speech and not be deplatformed, but also what the US Supreme Court has found, that we also have a right to privacy in various decisions, as you know. So is this certainly a thematic that you guys are pulling on in Naria? And to the extent that you are, is it also an area that we start seeing a different form of stakeholder capitalism take place, in complete contrast to what we're seeing espoused by BlackRock?
Yeah, it's a good question. I think it's certainly that this what we're calling new economy is an emerging category, and I think it starts with sort of obvious sort of internet and enterprise software type businesses, but based on what we're seeing from inbound deal flow since we've invested in Rumble, there's all sorts of other companies that are trying to serve a subset of the U.S. population with different brand and marketing strategies, and we've obviously seen that with like Black Rifle Coffee, and the quality of these companies. We've made one other investment of a company that's in stealth mode right now, but the quality of the founders and the technology that they're sort of deploying has just been increasing with really every company we've seen. Whereas a couple of years ago, there were some ideas, and it was really just almost a marketing gimmick, but we didn't feel like it could be a business.
You didn't make the investment in MyPillow.
We did not.
You passed on that. Okay.
Yes.
Okay, that was a joke. I know you didn't really consider it. But I guess that is a more broad point, though, which is it's one thing to just say, and there's this great bit that you can I won't say Google, you can go on you.com or DuckDuckGo.com to search for, and it basically shows how the two economies that are starting to sprout up. I mean, it's very clear, there's a liberal speaking, he's talking about his sponsors being Amazon, McDonald's, and Starbucks, and there's a right-wing guy who comes up and says, you've got to buy our Patriot water and our Patriot dirt. It's just dirt from the ground. And it's really awesome that you can just take this dirt and use it, but it's patriotic, which is effectively the MyPillow approach, which is we're just branding a consumer product and there's nothing more to it. But what you're finding is that there actually is real tech and kind of something proprietary behind these businesses. And I'll just point out that we're starting to see this self-manifested in the capital markets. So you mentioned a couple names, but in SPACs, as we all know, you've had a very challenged environment over the last year and a half. What has actually performed, whether you think there's merit to it or not, are some of these, for lack of a better phrase, committed companies to free speech, like Rumble. Rumble is trading above trust right now after announcing its SPAC merger. We don't need to belabor the point, but Trump SPAC is trading the 80s or 90s, which we've never seen before the deal has been consummated. And Black Rifle Coffee, last time I checked, after having completed its SPAC, is trading at around $17 as of yesterday. These are very, very interesting because what I think it demonstrates, and what we've seen and quantified it is that this is about at least 100 million Americans that feel like they're not being spoken to by the companies they interact with. And they're not just expressing themselves potentially at the ballot box or through policy, but actually going and affirmatively buying stocks. And it is, in a way, some sort of democratization of the capital markets. And SPACs, I think, have been a very efficient and elegant way to kind of see that very clearly. So I think it's an important wrinkle that I haven't seen anybody really write about, but we're observing it, I think, every day as practitioners. So anything that either of you guys want to comment on basically capturing the excitement of the retail side.
I'll let Chris chime in a second. The only thing I would say, the SPAC market is, I think, very interesting for this category. I think we'll see how long that lasts, but I think some of the later stage growth investors are still very cautious coming into this, into some of these companies, given some of the very negative press that the Parlors of the world have gotten versus like a company like Rumble that has very strong T's and C's and a very good inception story and mission. But I imagine that if the market will become more efficient over time as these companies start to really show their traction.
Yeah, and just to add to that, like what I've noticed and what I've seen from my side is that, when we started getting all this traction, one of the most common emails we would get were like, how do I invest in Rumble? How do I get behind this? I really believe in this. This is something that I really believe in. I want you guys to succeed. And I remember that happening in 2020, and it just kept coming in and coming in and coming in. And by the time we hit 2021, we felt like there was a real appetite there, and at the same time, it was really important to the business to go out and raise that money so that we can start competing against these incumbents. One of the things that is very obvious, though, when kind of stepping back and looking, is that how everybody's underestimating how big this really is. Whether it's institutions and corporations, they don't really understand how many people are on Rumble, how many people really believe in this, and how big this market really is. And that's the one thing I have my pulse on, and I think you guys have that pulse on, is that this is really big. Oh, yeah. There's a lot of appetite here for this, and we all really believe in what we're doing. And I think that that's being proven in the markets, and it's going to continue to be proven in the markets. I still think it's extremely underestimated right now from what we're seeing.
The consumer's desire for uncensored content is huge. You guys are doing it via video, but Substack is another example of a private business that's recent back that is allowing people to try to get information from folks that have either been deplatformed from Twitter or used to work at the New York Times and other places and decided to go it alone. And what it also sets up is a very interesting subscription model where folks are paying directly for the content that they want to read. And I think it's quite disruptive, actually, to digital media writ large.
Yeah, no, and just to add to that, what's really happening from our perspective is that this is the rise of like an independent economy. The creators are now owning their house online. It's not being driven by a corporation. So it's more so like less about the censorship is a huge deal, and that can't be underestimated. But at the same time, it's also about the independence for the creators, and independence in kind of like a fight back to the corporate media and the corporations. People want to start owning their audiences, and tools like Rumble and Locals, which we merged with late in 2021, allow them to really focus on owning the data, owning their subscribers, and really providing them tools to have real independence. So it's almost like a rise of independent media in a sense, both whether it's Substack, Rumble, Locals, or any of these platforms. There's a real push against that the corporate world.
Well, we've got about 10 minutes left, so we don't want to monopolize or hog the conversation. We're happy to open it up to the audience if you guys would like to learn about any particular aspect of what we started to discuss here. So I'm not sure if there's a microphone back there, but if anybody wants to ask a question, you can just raise your hand and we can get the microphone to you. Anybody want to go first? We have a question in the front.
We can hear you.
Yeah. Oh, right here.
Oh,
in
he's
the front row.
Bruce's.
Yeah, sorry about that.
Quick question for Chris. Have you been approached yet by any of the big media companies to take you guys out?
To
Take you over?
M&A.
Buy you out?
Oh, M&A. Great question. No.
Yeah, I mean I think that's telling. But what is also telling is that Rumble was able to do such a successful SPAC transaction and do it themselves, and now become a public company, which is what you guys are going to be soon. And I think that is really, just to spend a second on the SPAC product, what's so, I think, important about it. And obviously, it's received a lot of criticism. But for companies that are growing really quickly and really want to have their projections be predicated on future growth, the SPAC product allows you to do that. Investors have the opportunity to see your projections in 3 to 5 years. It's very different than a conventional IPO, where you've almost had to have already been established in many cases, and you're only allowed, legally, to kind of look backwards. And so that's why I think that the SPAC product has become a replacement for almost a round of venture financing in some cases. And you allow these more innovative products. What people don't remember is that the peak of public companies in this country was in 1996 and was at its all-time low, down 50% from that as of 2020, before the SPAC explosion. So I actually think the SPAC explosion, I've already mentioned some of the challenges to it. It really provided an opportunity for companies to want to go public again, many of who were dissuaded based on the Sarbanes-Oxley regulatory regime and how easy it had become to raise capital privately.
This question is for Chris. You talked a lot about the creator economy, and obviously YouTube is a competitive product to Rumble, but how do you see sort of all the other ancillary products, whether it be Facebook, Instagram, et cetera? So how do you sort of capture that creator and get them to spend more time on your platform versus some of the others?
So when it comes specific to like Facebook or Instagram or TikTok, they're very different products than a YouTube or a Rumble. They're really focused on the social network aspect, whereas when you look at Rumble, one of the things that's very differentiating between these platforms is that long-form video content, consumption of video, how people are consuming this video. It's really displacing, to a large extent, your traditional TV and cable. A lot of our growth comes from connected TVs and OTT. So you're seeing, it's a very different product. You're not interacting. This is a product you can interact with on your TV, whereas you're not really doing that with those social media platforms. So I don't really see that much of a competition with the Facebooks and the Instagrams. They've all tried to do the video thing like YouTube, and they've all failed. And I don't really see them making any good efforts to get into that space anymore after watching how they failed.
Do you want to just focus a little bit on what you're most excited about right now at Naria and what you're working on?
Sure.
Yeah.
Yeah, I mean, this is a subset of what we're doing, but I think one of the fun things about this job is we get to be very, very optimistic about the future, and so we're investing in founders that are solving a lot of problems that need to be solved, whether that's better access to data, true data around Medicare, or controlling the supply chain in our country to give most of the U.S. population access to fresh fruits and vegetables. We have a company in Northeast Kentucky doing that. So we're looking at a lot of different themes, very macro-driven, trying to think about what the world looks like 7 to 10 years from now and invest accordingly, as opposed to investing based on what happened 3-4 years ago. But the most interesting thing about what we do is we're spending, most of our companies are in the heart of our country. We have companies in Arkansas and Kentucky and Illinois and Ohio, and there's just a lot of great entrepreneurs in those locations, and that really understand these industries they're going after in ways that are harder to do in the Bay. And so just being able to support those founders in unique ways. And I still think at the Series A, B level, that market is very inefficient, and we're trying to capitalize on that opportunity.
Curious on your guys' thoughts on, I think, a huge issue that is fairly unprecedented for some of these younger businesses is just the cost of advertising that has occurred now on the digital side. So, one of the business models that we had here was embedded was the ability to kind of low cost and heavily target your advertising because of all the technology that had been developed. But, here comes Apple, and they've kind of thrown that whole thing out of whack as of last year with this new privacy opt-in that you can put in that many users are obviously doing. And so what's that done is really if you were trying to use Apple for that, you're not getting the data that you had assumed you would have before. And to the extent you're trying to go over to Google or an Android product, the supply-demand dynamics have made that much more expensive. So then what that turns into is the cost to acquire a customer has gone up 3 to 5 times, which simply does not work for the way that the business had been created. And then you add in some of the macroeconomic issues we're seeing with the supply chain. I think that's why you've seen in the public market these direct-to-consumer companies just get absolutely destroyed. How do you think they're going to be able to address this, or will they be able to?
Yeah, no, it's definitely an issue. We certainly have one company that's on the private side that's trying to figure this out. It's essentially a headspace or a calm for Catholics called Hallow out of Chicago, started by some classmates from Notre Dame. And the user growth is great, but of course the CAC has gone up for the reasons you mentioned. And what they're having to do is figure out alternative channels and sort of rethink that whole customer acquisition.
Advertising in newspapers, print newspapers,
yeah, well, they
TV.
just did a TV ad for the first time.
So
And
it goes full circle.
Exactly. So and there's sort of out of home and all these other ways you go back kind of old school with your marketing efforts.
Yeah, for Rumble, the unique thing is we never had to do that.
Right.
We never had to do acquisition of the customer. That's never been part of the plan. We've grown without that, just based on word of mouth through all the creators advocating for the platform and the users really advocating for what we want. There's a real genuine interest for what we're doing. So we haven't experienced that yet. I'm sure we'll get into acquisition in the near future, but at this point right now, we're growing like crazy without that. So we've been lucky in that regard.
Well, it seems like YouTube is an everyday advertising for you because every day they will deplatform something that's interesting, and the only way to get that video is to go over to Rumble, basically.
Well, yeah, they did deplatform the Oliver Stone documentary just last week. So the producers
absolutely
came to us and put it up, and now it's on Rumble. So yeah, they help us a lot in that regard.
And now you're having even the left, like Susan Sarandon, start promoting your content as well.
Yeah, we're seeing it's changing a lot really rapidly, and our focus is to be as neutral as possible and allow all voices to be heard and not get in front of that, not preface anything, and not editorialize what creators create.
Right. Transcend the political divide, but just be kind of more about just having free speech and empower the creator.
Yeah, well, what you're seeing right now in the market is like we started in the middle, and all these companies like Amazon and Facebook decided to pick a side and go to one side, and they left everything in the middle, and that's where Rumble is, and everyone just is coming to Rumble now. So,
if there are no other questions, I hope you'll join me in thanking our panel for their time today. Thank you so much.